Hello, everybody. My name is Jordan, and I recently wrote an article on Tencent over at Vineyard Holdings. So, what is Tencent, and why am I speaking to you about it today? In essence, Tencent is the owner of WeChat. They're much more than that, but in a nutshell, you might know them for WeChat, which is their flagship product. It's a social media product, which is basically like iOS in China. If you think about how you use iOS to you'll go into a bunch of different apps and you'll do apps for your daily life, whatever, like you've got your social media and you'll share things over WhatsApp. You've also got Uber and you can go order your Uber. You've got restaurants that you can get delivery from. WeChat is very similar to iOS, but it's in one app. And within this app are little mini apps. They're called mini programs. And so the Chinese users will go on via WeChat and use these mini programs to interface with local shops, and a lot of their day-to-day is basically operated either via these mini programs or just WeChat general functions. And they'll share all of these things with each other, making this probably one of the biggest online and most entrenched online tools in the world. Now, why is WeChat so important for Tencent? Well, because WeChat is so important in China, it gives Tencent an incredible operating advantage over a lot of other companies in China. Tencent effectively controls a lot of the traffic flow and the data flow through China. They have become brilliant, world-class at managing data, as well as directing traffic to and from different companies. Where this gets really cool is Tencent have developed, in addition to WeChat and a lot of the other core operations, like they have a similarly massive gaming arm. They are probably one of the biggest gaming companies in the world. They have deep advertising expertise, obviously because of WeChat and via the other social medias and kind of just general media that they put out. They're big into music and whatnot. They are one of the biggest advertisers. So we've got gaming, WeChat, and advertising. They have some more. They're developing cloud and other capabilities, but really those I would say are the core three. Now, in addition to those, you've got what is becoming this incredible portfolio of companies that they've invested in. And it's a really cool possibility because they've kind of got a magic wand with WeChat, where if they can take a small stake in a company, let's say they take a small stake in an up-and-coming e-commerce company to challenge their biggest rival, which is Alibaba, and then they start directing traffic on WeChat to this e-commerce company. This e-commerce company over time can become a powerhouse, which you have seen in Pinduoduo and JD.com. Both of these are ex-Tencent, or the current, but they're Tencent investees and are now massive competitors to Alibaba. So Tencent has this kind of massive bazooka on their shoulder in WeChat. It is cash generative, data flash, and kind of the basis for a lot of Chinese operating system. So why am I bringing this up? Well, because Tencent there's a lot of fear around the regulation and the state involvement, especially following the Ant Financial restructuring, which is a finance arm of Alibaba. The Chinese Communist Party, which is the state kind of government at the head of all of China's regulations, have come down very hard on big tech in China with a lot of antitrust dealings. And so there's understandably skittishness in the market towards Chinese tech. Very justifiably so. These are very legit concerns and cannot be overlooked. However, combine that kind of fear with the underestimation of WeChat's dominance and the potential optionalities that are within the company and within their portfolio of investees and their product range, etc., etc. And you kind of get this misperceived idea of what Tencent is. People either think it's a CCP puppet or it's this kind of dying company. It's a boomer stock. It's not really, there's not that much growth ahead of it because people can see the monthly average user count for WeChat kind of slowing a little bit. I mean, it's pretty much flatline actually. They think that Tencent is not going to grow much. And you can see this in analyst estimates. The average analyst estimate is around 15% growth rate going forward for the next couple of years. I think it's a mistake to see Tencent as a social media or entertainment company alone. And there is an element of success that they've had in branching into industrial B2B, which is different to their core capabilities. Now, this is where things get quite tricky with Tencent as an investment thesis, because on the one hand, you can look at their core operations and kind of project it forward, look at standard industry growth rates, and you can say, okay, Tencent will probably grow at roughly 15% per annum. That's roughly in line with their expected stuff from analysts, as well as just general industry. That growth rate, it misses a little bit of the expected sales into B2B markets, because most of their core operations are B2C. Now, within B2B markets, you've got cloud, and you've got some value-added services that they layer on top of this. You've got some, okay, let me give an example here. There is a tire company, and this tire company wants to understand their customers and what their customers are buying at the front end. And so they also want to integrate what their customers are buying, the data that they get from that, into their back-end thinking, and how they can construct kind of sales processes, order flow, demand matching, these kind of things. They need a system to do this. They would preferably like that system to be on the cloud. So Tencent comes to them and says, okay, well, we can do this. We can offer you this cloud service. And because we've got WeChat on the front end, and we're developing this thing called WeChat Enterprise, which can kind of connect the two, we can offer you a full stack of your entire value chain. We become the utility off which you can build, and we can give you incredible insights into your customers. This is a decent value proposition to a lot of manufacturers, a lot of businesses, a lot of Chinese companies who are at present hesitant around getting into cloud or data or anything like that, because they think that there's not enough return on investment for them. I'm getting a little bit into the weeds here, but the point is Tencent has the potential to grow into non-core consumer businesses. And these lines of businesses, like cloud, can grow much, much faster than 15% per annum, which means the cumulative bundle of Tencent can grow much faster than 15% per annum, as successful as their B2B is. Now, how successful has it been? That's debatable. They don't necessarily have the core capabilities. Alibaba has done pretty well. Alibaba's cloud growth is fantastic. Tencent's cloud growth is also good. They're roughly sitting around third market position in China in terms of cloud, and that gives them a pretty good base to build off. Cloud is growing at roughly like 90-80% per year. If it even slows if it halves to about 40% per year over the next 6 years, and you just keep that, you track that 40% out, then cloud will account for their entire 2020 sales in 2026. That's all locked in to the current Tencent valuation when you project out the 15% analyst growth rates that most people think Tencent is going to grow at. So essentially you get this really deeply entrenched social media company / gaming company / advertising company, which also has a bunch of investments that can do really, really well if they can continue to direct traffic and they can continue to make strategic venture capital bets and whatnot. Plus you get this growing cloud B2B services business, all for the price of just the core Tencent operations. Now, when we're looking at the market, we've got to say, okay, well, Jordan, when is this going to happen? When is the market going to realize this, quote unquote? And that's a much tougher one. There are many risks. One of the bigger ones is just like execution risk. Tencent is not a B2B business fundamentally, which makes their branching into B2B a little bit tougher than we can just thumbsuck and say it's going to be there. However, if they successfully execute on B2B, and if they can start reporting on cloud or other non-core business operations in their financials, I think we'll see a bit of re-rating around the sentiment. People will say, oh shucks, Tencent is a little bit more than just a social media and entertainment company. Similarly, they could have some of the underlying companies in their investment portfolio list publicly. That would be a affirming thing for investors. They would look at the listing companies and say, sure, but there's a lot more value hidden in this investment portfolio than we originally thought. Those two things I think could be catalysts for either multiple expansion on the company or just a generally improved sentiment around how they're going to do. So what are some risks to this? I already mentioned execution risk is a big one. There is also increasing anti-monopoly regulation. This is coming from all layers. It's coming from CCP. It's coming from ground up. I think there's a growing sentiment around Tencent that it's not creating as much value as it's necessarily capturing. And so that creates a bit of a pushback in terms of sentiment from, I want to say grassroots, but it's not really grassroots. It's just from white-collar workers in general around China. This is a very broad sweeping statement, but it does make it a cautious stepping point for Tencent. This can mean they can face troublesome M&A in the future. It's much harder for them to do little bits of deals here and there if they are getting pushback from the Chinese government every step forward. It also means that they're going to struggle to monetize products. Tencent have been notoriously under-monetizing a lot of their products, and it's taken me a while to understand it, but I think they are serious about not wanting to necessarily maximize the average revenue per user, for instance, of each of their products. They are more interested in being a utility than necessarily being a super high margin corporate. There's also the big looming threat of ByteDance's TikTok, which is TikTok in the West, Douyin in China. This is a fantastic social media product. I mean, it's like stupidly good. The way they can blend algorithms and capture user attention is literally unbeatable. And this is taking away a lot of eyeball time from Tencent and from WeChat, from the games, because eyeball time, I'm using that phrase, because consumer attention is zero sum. There are no ways that you can, listen to a podcast, watch your TikTok, and play Honor of Kings, which is a Tencent game, and go on WeChat and all in the same time. So it's zero sum. This means any form of entertainment is effectively in some way or another competing with each other. This puts TikTok at quite a strength advantage because they've got such eyeball time, partly driven from that like addictive algorithm of feeding you good user-generated content. WeChat is slowly starting to embrace algorithms in their products. They've traditionally been more peer-based, and Alan Zhang, who's the founder of, or the starter of WeChat, he is almost kind of Steve Jobs-like in his arm's length approach to data. He far prefers just human sharing. There's also the possibility of TikTok moving into kind of premium content, which is traditionally just Tencent's domain. Now, some quick questions, rapid fire, to sum it all up in terms of like what you should take away from Tencent now that I've set the lay of the land. Can sales double in 5 years? Yes. Offshore expansion, B2B services, cloud, finance, e-commerce, these things can all help a lot. I did explain that earlier. Possible 10-year outlook. WeChat Finance can capture at scale. It'll be tough to disrupt the entire Chinese banking system because it is an incredibly deeply entrenched and political sphere. So I don't think that Tenpay will be allowed, quote unquote, to disrupt that, but they can still capture finance. There's an adoption of the metaverse, which is a concept that if you are reading, go and read Matthew Ball's work on the metaverse, incredibly interesting. There's the adoption of the metaverse, which can open up advertising revenues for Tencent, as well as a continually excellent investment portfolio. All of these can help out with the 10-year outlook. Tencent's competitive advantage: they are the most scaled, most all-encompassing platform in the world, with an unrivaled media distribution network. So do they actually add value to the world? That depends. Do you think that something that underpins most entrepreneurship in a country adds value, or that WhatsApp adds value to your life? These are questions that you'll need to answer. I personally think, yeah, hugely. Worthwhile returns, yes. Platform, it's a platform, and platform economics are fat tail distributed, so it's pretty much winner take all. Now, in the company, how is capital allocated? Big important question. It's patient. The founding team in Tencent is quite a unique blend of guys, with Pony Ma, who's the founder and CEO and largest single shareholder. he's a very reserved guy, quiet, patient, doesn't really claim the limelight, and this flows through into his capital allocation. Very patient and strategic guy, plays the long game. He's currently shifting a lot of the money from the core consumer entertainment things to the industrial internet and kind of strategic global investments that I've spoken about. Now, that also filters into the business culture. So do they have a differentiated business culture? I would say yes. There's a patient and quiet founding team, very customer centric. There's an anecdote a while back of Pony where he got some office chairs in his office, and he was trying them out for the staff, or he ordered them in for the staff. And to do this wasn't even like an exec level staff. This was just one of the floors of the Tencent building with like mid-tier management. He gets these chairs in, and he gets like a range of them, and he personally sits on the chair and like swivels around and tries it out before deciding if it's good enough for his employees. So that's pretty cool as far as customer culture goes. As far as company culture goes. There's more to say there. They're also hyper competitive and Darwinian in the way that they kind of fight inside products off of each other. If they have two development products in the pipeline, then they will kind of pit them against each other internally, see which one wins out, and then present that to the customers. Or they'll put them together in the market like they've done with QQ and WeChat. Now, also, it's a dev environment, Agile 101. And what's quite nice is it seems quite free. There's a lot of anecdotes online about guys who are just shooting off ideas in the office. It seems like quite a cool place. There's more to say there, but if you're interested, you can read the article. So in a nutshell, the market is missing the cloud, the B2B, the AI, the non-core businesses, all of these things. The growth runway for these are very big. And the market is missing both of this growth runway and the ridiculous, deep, entrenched system that WeChat is currently, which offers them such a platform to branch off into other little things, or to just manage the data operations and the traffic flow and whatnot within China, and that whole kind of investment flywheel that I spoke about earlier. WeChat gives them that possibility. Anyway, that has been Tencent in a nutshell, and I hope that you have enjoyed the listen.